Welcome to Marketopolis, at the crossroads of Wall Street and the internet. In a feed-driven era powered by Reddit, Robinhood, YouTube, X, and many other platforms, retail investors drive the conversation online. Corporate access has been blown wide open, conversations move at the speed of social platforms, and CEOs, IROs, and comms teams are rewriting the investor relations playbook in real time. I'm Matt Joanou, CEO of Stakeholder Labs. Each episode, I talk with public company CEOs and top operators to uncover fresh strategies for communicating and competing in today's markets. Whether you hold a single share or just love the story, you'll take away practical lessons for navigating modern public markets. This is Marketopolis. Let's get into it. Hello and welcome to Marketopolis. I'm Matt Joanou. In today's episode, we have a very special live edition from Benzinga's FinTech Day in New York City. In this week's episode, we took the stage to chat with Anthony Denier, the CEO of Webull, a company at the forefront of the modern brokerage world, helping everyday investors engage with the markets in new and dynamic ways. We go beyond the numbers and the apps to dig into how Webull is thinking about the future of investing, how retail investors are changing the game, and how leadership adapts in an era of FinTech disruption. This is exactly the kind of candid, strategic conversations that define Marketopolis, where we give you a front row seat into how the executives behind public companies are thinking about money, markets, and growth. So whether you're an investor, a professional, or simply curious about how finance is evolving, you won't want to miss the insights from Anthony in today's episode. Let's dive in. The future of air travel is fast approaching. And to help shape it, SurfAir Mobility is building a platform to bring together AI-enabled software, electrified aircraft, and a nationwide flight network targeting an estimated $100 billion regional air mobility market by 2035. Their SurfOS software, powered by Palantir, is designed to be the intelligent operating system for private aviation and air mobility. And with over $100 million in annual revenue and the owner of one of the largest commuter airlines in the U.S., SurfAir Mobility is uniquely positioned to advance next-generation technology across the industry. To learn more about SurfAir Mobility, visit surfair.com/Marketopolis. This program is intended for educational and entertainment purposes only and should not be considered investment, legal, or tax advice, nor solicitation or recommendation regarding any security. All opinions expressed on this show are solely those of the guests and do not reflect the views of Benzinga Inc. or its affiliates. Our show description contains additional disclaimers and disclosures. All right. This is our first live episode of Marketopolis. We are very excited to have Anthony Denier here to represent Webull and talk a little bit about his journey as CEO and the company itself. So to kick things off, Anthony, would love you to introduce yourself, tell us a little bit about your journey and how you got to this role as CEO of Webull.
Sure, happy to. It's also great to be back at Benzinga. I've been doing Benzinga's conferences since before COVID, so it's always nice to come back and see a lot of faces you haven't seen in a while. Many people don't know this, but yes, I am CEO of Webull. I'm also group president, which means I oversee all of our global operations. We have 14 broker-dealers around the world. But what people don't know is that I am also employee number one at Webull. Not only did I start the LLC here in the US, but I hired the first person. So I'm extremely proud of that, to think about where we've come from back in late 2016 to where we are now as a publicly traded company.
So maybe getting into that a little bit, Webull is in a market that has a lot of players. Would love to hear a little bit about how you differentiate the company. You guys are now a public company. Maybe you can tell us a little bit about how you operate that's a little bit different than some of the bigger players out there.
Sure. So Webull's always differentiated ourselves from the digital brokers that were coming to market, especially back in the earlier days before pandemic. We've stuck to concentrating on sophisticated investors. If you were to put the Webull platform next to a lot of our peers, even though we're app-based, even though we have a very, very similar demographic of customer, and especially in terms of age and AUM size, the experience level tends to be much higher. So if you take a typical Webull client, Webull is their third brokerage account, as opposed to a lot of our peers where that digital broker may be their first brokerage account. So it definitely changes in terms of how we interact with our clients and the amount of data and the amount of analysis that we're giving to them. I think when I think back on when we first came to market, and I'll get into some specifics on this, but I think there's an easy way to differentiate where back in 2018, we launched our first brokerage account in the US, May 2018. At the time, there was no such thing as zero commission, at least not on the mass scale, right? Robinhood was zero commission. There were a couple other smaller platforms that were zero commission. So when we came out as a zero commission app first platform, it was very differentiating at the time. And what we found is because the way that we presented the information and presented the app is that we were taking, this is a long time ago, mind you, but we were taking the more sophisticated clients that really enjoyed the zero commission experience that maybe they were getting at like a Robinhood. At the same time, you had Thinkorswim, you had Power E-Trade, you had a lot of sophisticated kind of legacy web-based platforms that were still charging their customers commission. So we were taking a lot of market share from them when they didn't want to lose, or the customers didn't want to lose functionality, but wanted to save money on the transaction cost. So it really put us in a unique spot until everyone went zero commission at the end of 2019, which was a whole nother tailwind that accelerated our industry to the next level.
So focusing on the more sophisticated investors, you talk about this being their third brokerage. I guess looking out at the macro environment, how have you seen retail investors evolve and adapt? We've seen multiple cycles. I know a lot of the folks in the room are very attuned to the journey that retail's been on the last 5 to 10 years. You've had a front row seat. Maybe talk a little bit about the macro and then how Webull continues to focus on your target user and customer.
Yeah. So when you present such a large amount of information to retail customers, there's kind of a positive and a negative effect. It's almost like drinking from a fire hose sometimes. Like, how do you make sure that your clients are seeing information that is actionable and important to them? And there's a lot of iterations of how to do this. But most importantly, and from what I see in my position, and I have had a front row seat, thank you. What I see from my position is as retail investors have become more normalized in getting access to this information, they've got a whole lot smarter on what information is worthwhile looking at and what is not, right? And they use a bunch of different platforms. And every platform, especially on the trading side, I think has a tendency to try to be everything for everyone. And that is not, I think, the direction that the market is going to go. I think we're concentrating on newer technologies. We just announced this morning our release of Vega, which is our AI platform, which specifically looks at user interest and what that client is investing in and presents that information to them, kind of cutting down the bandwidth of that fire hose and making sure actionable information is getting to them in real time and at the right time. We're seeing the whole industry going this direction. So as retail investors have evolved, they've gone from getting not only access to information 6 years ago to now understanding which information is valuable and which is noise. And that's where we're going to continue to see consolidation on the experience of getting access and deciphering which access is worthwhile.
On that point, when you guys look at partners, I know you guys are a Benzinga News partner and you ingest their news through the API. How do you guys select working with third parties to ingest this? How do you maybe look at, well, the users can get this on their own from a third-party app. We don't need to have this within the experience on Webull, or maybe in-house. How do we build tools that provide unique data sets to our users in a new format? What's kind of that calculus in your head?
It's constantly evolving, right? There's no static answer because as the industry changes and as new players come, and this conference, for example, I've walked around the floor and I've seen a bunch of new businesses that have started up specifically concentrating on market data, right? So there's no shortage of new platforms that are offering a unique take. So my calculus is constantly be nimble, right? Constantly be able to pivot on new technology that is coming out and embracing it. A lot of times, we look to build it ourselves, but when it's already built, I'd rather partner. The fact that we have gone public puts us in a position now where we have a significant war chest that we can take advantage of, whether it's partnering with some of these firms, whether it's becoming an exclusive partner. Those are all opportunities we look at on a daily basis.
Touching on running a public company. So first employee at Webull, you've been on this journey from private to public. Do you want to walk us through a little bit what that transformation was like for you personally to be in the seat of running a public company? It's a unique position running a brokerage as a public company CEO. Would love to get your thoughts on that personal transition and maybe what you learned along that journey to where you're at today.
Well, I'd say I'm still learning. But that being said, we've been public now for a little over 6 months. We went public listing in April of this year. We are set for our third quarterly report, actually Q3, which is going to be our third reporting on November 20th. And it's a constant learning experience. Moving from being a private CEO, going from a public CEO, it's been, I would say, interesting that you have to force yourself to be removed from a lot of the day-to-day operations that were so embedded in what you did on an average day. And a lot of that comes from trusting your team, making sure that you surround yourself with people that when you're not available because I'm flying somewhere to meet investors or, I'm doing a conference, that the team I have can manage the brokerage operation. And so I get to focus now on talking about why Webull is doing what we're doing, why we're innovative, why we decided to, make some acquisitions or we decided to raise capital for whatever reason. That's exciting now. That's a whole new chapter in our growth as a business, and something that I'm still learning along the way.
So we've got a fun question that we tend to ask the public company CEOs that are on the show. I'm always curious, how do you track your stock? Do you have an email that's sent to you by your team that's giving you all the data, the flows, etc.? Are you pulling up the Apple Stock app? Are you in Webull looking at the stock price? What does that look like from a day-to-day basis? And I know most public company CEOs say they try not to track the stock price, but I'm sure you're taking a peek at least once a day.
Yeah, that's what they told me to say. I don't look at the stock price every day, but whoever says that is full of shit. You do look at the stock every day. I have been a institutional trader my whole career. I started on a trading desk in Credit Suisse that used to exist back then. That's kind of aging myself, but I have access to a lot of different ways to see the market. My number one, of course, is our own app and my own Webull account. We do get the exchanges that provide us with a lot of color and information on a daily basis, whether it's NASDAQ or New York Stock Exchange, on what they're seeing on an institutional side, blocks that are trading. So there's no shortage of information. But when we look at the stock price as a CEO, I'm looking at it not on a quarterly basis. I'm looking at it on a yearly basis. I want to return on the promises that we made at the beginning of the year, at the end of the year, not on every quarter. Right. So a 3-month process is a very short amount of time in a business that takes a long time to change. And if you look at, the changes in our industry just over the last 6 months, products like predictive markets, right? Who would have known that, I would have been offering college football on Saturday afternoon on a brokerage platform, right? Tokenization of assets. All these new products is what I focus on when I think about the stock price. And so I'm very, very excited about our forward-looking opportunities.
It's fascinating to hear where you're getting your information. Maybe expanding more on the macro side. Are there newsletters, podcasts? Like, what's your information diet? Are you reading the Wall Street Journal or Barron's or Bloomberg? Like, where do you get your news to stay abreast of what's happening in the broader marketplace?
Well, overall, the easy ones are just having the TVs on in the background, right? So I got Bloomberg running 24 hours a day. I got CNBC on when they're not doing Jim Cramer stuff. I basically read, I couldn't tell you how many emails I read a day on people giving me updates on what's going on in the market. I do commute every day to work, take a train every single day, never stopped. And that's when I put in my earbuds and I listen to a bunch of different podcasts. A couple are news focused. I try to keep them pretty center when it comes to politics and it comes to macro events to get both sides of the story, because there is no all one country here. There is no right side or wrong side. It's about opportunity and knowing what's happening, not only for my team, but for my shareholders.
And talk about your team. You guys have an office in New York and down in Florida. Would love to hear about how you guys decided to open that office down in Florida, what kind of folks are working down there, and then maybe expand a little bit. You guys are also international. That's fairly unique as far as running a brokerage in this space. Would love to hear about the domestic presence and then also the international efforts and how you guys think about that broader team effort.
Sure. So right before, right after, nowadays, everyone kind of, at least I trend my timeline of life based on like huge events, whether it's September 11th or it's pandemic. So this is post-pandemic. We purchased a building down in St. Petersburg, Florida, to house our operations, customer service, and growing brokerage team. We have marketing functions down there. We do a lot of our social media stuff out of St. Petersburg, a lot of our operations, and a lot of our institutional businesses that we're getting into are housed down in St. Pete. Have about 250 people down there now. Here in New York, which is where I started the business in 2017, we have about 100 people here in New York. A lot of the front office people, margin, capital markets, people that need access to the industry, people that need access to New York in a lot of cases are still here. Now, why did we decide on St. Pete when we were already in New York for several years? Couple reasons. We were growing so fast. It's a lot easier to hire younger people when you're surrounded by a lot of universities. St. Petersburg has multiple universities down there. Cost of living is also less. Quality of life, you can all have your own opinions, but quality of life is also a little bit better in St. Pete than it is in New York. Like I said, I commute every single day, and that's 4 hours out of my day. I'm sending emails and listening to podcasts. There's a lot of young people that don't appreciate that, right? And think that that is not a good use of their time. So St. Petersburg was a good place for us to expand our recruiting efforts. In terms of international, that is one of the parts of our business that really differentiates us from a lot of our peers. We operate in 14 different brokerages around the world, 13 outside of the US, obviously. I spend a significant amount of time dealing with all the local leadership teams at those broker dealers. But one of the things we've always maintained since we opened up our first non-US broker in 2021, which was Hong Kong, and then 6 months later, we opened up Singapore. Now we are truly global, has been we've always wanted to make sure that we have a local team that is defining that product for the local population. And since the beginning or the end of 2024, and we've gotten very aggressive in the beginning of 25, is making sure that we are exporting the U.S. retail experience outside of the U.S. And so the most exciting thing for me is seeing our non-U.S. businesses really start to take market share in those markets and start to be really accretive to our total group revenue profile, where 3 years ago, it was a tiny % of revenue attribution coming from outside the U.S., right? Now it's a significant portion, and it's one of the largest growing parts of our business. If you could imagine the growth we've had in the U.S. alone, we're seeing international growth even trump the U.S. growth, which is extremely exciting as the rest of the world starts to understand the benefits of retail investing. And you can look at stats of, the average U.S. household, about 60% of them have access to the equity market, meaning 401k or a brokerage account. That number is 10% in the rest in Western Europe, right? So the opportunity is just so great in that market. Extremely excited to continue growing there.
We've got a lot of founders and business leaders in the room. Maybe expanding a little bit on the international opportunity and how these markets are transforming. You threw out a few stats, but what are the maybe differences between the US market users versus international market users when it comes to behaviors within the app or the experiences themselves?
So if you asked me that question a year ago, I would say non-US extremely conservative versus US. That dynamic has changed substantially over the last 12 months. If you are an investor in, let's say, NVIDIA, and you're sitting in Kuala Lumpur, you're looking, you're reading, you're watching the same exact socials, the same exact news flows, the same Reddit channels as someone that's sitting in New York that's also invested in NVIDIA, right? You're watching the same influencers. So we're starting to see the attitude and the conviction really start to align. 2 years ago, my UK CEO, I was like, I think you need to start US options trading on your platform. He reaches back and he says, no one trades options in the UK. We have CFDs. We don't need US options. No one talks about it here. Today, in our UK business, US options is the number one revenue product that we have. So that same momentum is happening elsewhere.
It's fascinating to see that globalization. And I think the access to information and the same information is higher than it's ever been. You mentioned X and Reddit, StockTwits and Benzinga and all sorts of players in this space. I'm curious, maybe shifting gears a little bit, how do you imagine Webull shareholders have found Webull? Are you thinking that these might have been users that once you guys went public, they wanted to buy in, they were a part of it, or maybe it's people that are just, no pun intended, but bullish on the space and see you guys as a big player there? How do you imagine them discovering and then making that decision to bet on you guys as a company?
Yeah, I would like to believe it's a combination of all those things. But the reality is, Webull is still an unknown, right? When I talk to anyone on the street and say, what platform do you use for your brokerage account? Very few times do they actually say Webull, right? And to me, that's nothing but opportunity, right? That's our ability to use us now, use our opportunity we have as a public business to really get our name out there in terms of what we do as a platform, how we differentiate ourselves. I do think that we do have a significant amount of clients that are also owners, which I'm extremely proud about. I think there's nothing better than having your own customer buy your stock, which means they like what we're doing. They like the platform that they use. It's a great vote of confidence. But that number is still small, and I expect to see it grow over time. Again, we've only been public for 6 months, so this is still all relatively new.
A little bit fresh still. Appreciate that. Relatedly, Stakeholder Labs works with a lot of publicly traded companies to help them activate their retail investors, to drive market awareness, and really build shareholder loyalty. When you're looking at other public companies trying to access their shareholders on Webull, I know you guys have a product called Corporate Connect. How are you seeing more of these public issuers look to engage more directly with retail investors? And maybe if there's anything you can share on Corporate Connect and how companies have been leveraging that over the last few years.
Yeah, no, it's great you brought that up. So Corporate Connect is a service that we've been offering now for the past 3 years. And what it does is we reach out to publicly listed companies that our retail investor base has ownership in and say, do you want an opportunity to speak directly to your ownership base? It's an easy sell, by the way, because now retail investors are such a huge profile of an investment portfolio of a public listed company. There is no denying it anymore. Going back and you want to look at stats only 5 or 6 years ago, retail made up 12% on a big day in terms of average daily volume trading. Now on a big day, it's north of 35%, right? That number is going to continue to be influenced. I don't need to speak to this crowd about the opportunity or the impact of a stock going meme, right? And what it can do for that company, at least the opportunity to gain access to capital for that company. So it's been a very easy sell for us to grow our Corporate Connect service. I think not only is it beneficial for the companies that are listed, it's really beneficial for retail. Now, I've been in this business for a long time, especially on the institutional side. And when, the portfolio manager at Fidelity calls up a publicly listed company, that CEO is going to pick up the call. When you have someone that owns 1,000 shares of that company try to get in touch with the CEO, it's almost seen as like an assault, right? This changes that game. It's a way for retail to responsibly engage with company management in a way that is not only compliant, but is also really beneficial for both parties because every company that's listed wants to get their story out there.
Yeah.
And so this is something that I've only seen growing over years. I know a lot of our competitors are going down this road and partnering, with different firms to get access to their investors, to publicly traded companies. So it's just a good time to be a retail investor on a lot of different fronts.
It's fascinating to see how much has shifted in the last 5 years. I worked at Reddit before founding Sequoia Labs, and obviously the power of self-organized online communities and the influence that Reddit is, or that retail investors are having within this market, is undeniable. We're coming up on time, but maybe shifting gears a little bit. We like to ask CEOs about their personal investment philosophy. You're unique. You have a Wall Street background, obviously running a brokerage business. Curious, like how do you think about investing personally? Obviously, a lot of your upside is built into the company that you're running, I would imagine. But how do you think about it? Are there tools you use? Are there other apps you like? Anything you're willing to share on that front?
Well, I need to be careful. I think I have one of my compliance people here. So keeping that in mind, I have always been, and you guys might find this actually a little anticlimactic, but because I have been in this industry for so long, my income, my compensation is heavily, heavily levered to the cyclicality of the market. Market does well, I do well. Market does not do well, I'm not doing that well. So typically, I tend not to be heavily invested in the market at any given time because then it's like a carry-on, double-down effect. I am pretty conservative when it comes to investing, and I tend to put a lot of assets into more hard assets when I have the opportunity to do so. But you are correct. I do have a significant amount of ownership in the performance of my own stock, Webull. And so that is my number one priority.
You've got earnings coming up. I know you can't speak to a lot of that. Maybe using what are non-financial goals, KPIs? What are things that you would be proud of 5 years from now that Webull is accomplishing, that it's doing as a business? Again, as much as you're able to share on that front, but what are things that people can look at that are really moving the needle, that might be non-financial KPIs that are showing growth and accomplishing what you believe Webull will be able to accomplish?
Yeah, it's a great question. 5 years is a long time, but KPIs, even non-financial in 5 years' time, I think number one is trust, right? Trust not only from our clients, number one, but from our investors. It's very important for me when we talk about internally where we want to be over time, make sure we exemplify the idea of global community and global investing. So we have offices in Sao Paulo. Why are U.S. customers not able to trade Brazilian stocks, right? Our customers in Brazil can trade U.S. stocks, right? That's something 5 years' time, I think, is going to be a global opportunity. A lot of that is going to rest in tokenization of these assets, in my opinion, rather than traditional settlement. But that's a great KPI that I would love to see in 5 years' time. Also, looking back, I would love for not only investors, but our clients to think of us as always being on the forefront of innovation, right? One of the greatest benefits we have as a quote unquote startup, right? I think we're a little past the startup phase, but we don't have a battleship to turn in terms of new product rollouts or the market changing in any different direction. So we need to be the ones to be first to that new product, that new event. And I'm talking about, battleships like the Schwabs of the world, right? The E-Trades of the world, right? They're great platforms. They've been around for a long time, but they're not nimble. And so 5 years' time, I want people to say that Webull was always first to that new change in the market, that new adaptation or the new way to look at a product that maybe has been around for a while or has been changing and evolving over time.
We're living in a fascinating world and things are moving quickly. You mentioned prediction markets, you mentioned tokenization. Any other areas that are piquing your interest and you'll want to be exploring in 26 and beyond that should be on the audience's radar?
Right. So I've talked about this before, but certainly didn't get too much press on it because I think it's still a little boring for the general audience. But fixed income, when you think about everything that's happened for the past 30, 40 years in terms of markets and how they change, the equity markets, why did it go down in March of 2020, right? Why did we see that big bubble burst? Why did we see the big bubble burst in 2008? It's because of fixed income. It's not because of equities. All right. And so we're in a similar situation now where fixed income could be the possible driver for any sort of change or any sort of catalyst of change. We launched corporate bonds about a month ago. We launched US Treasuries earlier this year. Creating a retail-friendly version of investing in these products is something that I think is going to have a lot of impact in the next couple of years as we start to see changes. And then on top of that, I'm sure everyone in here has talked about wealth transfer. Try transferring wealth without a fixed income portfolio, right? When you're talking about large AUM clients that want to transfer 50 million over to your platform, they're not all in equity, right? So you have to have the tools, you have to have the products so you can actually transfer their assets over to you. That I think is at least talked about.
Maybe we'll have someone in the audience build that, and they'll be on stage with you next year talking about a partnership. We'll see. We are almost at time. The audience, we've got a lot of founders, execs running fintech companies, maybe leaving them with some advice. You have a unique background. You come from Wall Street. You've been employee number one at this fast-growing startup, taking the company public, advice, lessons learned along the way, things that surprised you. We'll leave them with this, and then we'll close things up.
Sure. Well, I've been in all your seats. I was employee number one, like I mentioned, and scaling a business is not only difficult on you personally, but it's difficult on your family. I would make sure that you have a good base and what you want to achieve. And again, surround yourself with the most talented people. And this is a canned message. You've heard this so many times, but it's true because people actually believe it and it works. But there is no substitute for the grind. There is no substitute for hard work. You surround yourself with hard workers, and I get a lot of shit in the office, but I have been asking our employees to come in 5 days a week since New York City opened at the end of 2022. Not really good recruiting method, I will share, and also not a good retention method. But my team has got here because we have been so aggressive in making sure that we are collaborative. We are working our asses off every single day, and we do not let setbacks make us shy away from what we're trying to do and what we're trying to build. And it's one of the things I'm most proud of, especially when I sit with, the small team that we started with and speak regularly. I do monthly town halls with everyone at the firm on a regular basis. And I always tell them there is no substitute for getting in and doing the work. So that's my major feedback I can give the founders, right? Just don't be dismayed, keep grinding.
I love it. Anthony, thank you so much for joining us today. To the audience and to Benzinga, thank you guys so much for joining us. Marketopolis is a weekly show. We bring on public company CEOs and do conversations similar to this. We ask questions that they're not typically asked and surface advice, information to help you run your companies and understand what it takes to run a public company. So would love you to tune in. Thank you guys. Enjoy the rest of the event. And thank you, Anthony.
Yeah, thank you, Bet.
Thanks for tuning in to Marketopolis, powered by Stakeholder Labs. If you enjoyed this episode, make sure you're subscribed so you don't miss upcoming conversations with leaders shaping modern investor relations.